welcome back. You're watching the ET Money Show with me, Kavita Thapliyal. Union Finance Minister Nirmala Sitharaman unveiled the much-awaited union budget, and as expected, the FM made several announcements that have made the headlines. And to unpack the key takeaways, we have on board Amol Joshi, founder, Plan Rupee Investment Services. Amol will answer your mutual fund portfolio queries. So all you have to do is just send us your queries on our WhatsApp number, which is 865-797-4571, or you can also email us your queries on themoneyshow@etnow.tv. So that's the address, and welcome to the show, Amol. And we also have the first caller who wants to ask you a question. Do we have Udaya Kumar from Chennai online? Okay, so till the time we get our caller to ask the question, let me just go ahead and take this question of Udaya Kumar from Chennai. And he says that he wants to invest in a tech-oriented scheme for future, and he is really looking for a mutual fund scheme that has exposure in IT sector. Given the time we are right now, we don't know what kind of investor is Udaya Kumar. We don't know what's the existing portfolio. So the information that we have right now, Amol, is very limited. Now, having said that, what kind of investor should be going in a sector fund? And at this time, you think an IT sector fund would make sense for them?
Right. Kavita, you make a valid point. A typical investor, ideally, we all advise not to look at sector funds or thematic funds for the simple reason that one sector can get affected via various factors, but overall market doesn't get affected in such case. It could be technological disruption, it could be entry of a new player, it could be any geopolitical event. As you know, the IT sector could get affected a lot based on the trajectory of NASDAQ companies or US tech companies. So ideally, typically, we do not suggest investors to go for a standalone sectoral or thematic fund. Having said that, we assume for a moment that Udaya Kumar has done his research and wants to invest in a tech scheme, maybe in a limited component, and this is not the primary portfolio for him. I would suggest, with that disclaimer, of course, I would suggest there are hardly 4 or 5 schemes.
Amol, I will have to stop you here because we have Udaya Kumar. So let's just take all the details that we need from him. Udaya Kumar, hi, good evening, and thank you so much for sending us your query. We are taking your question on the ET Money Show, and from what I understand, you want a specific tech-oriented fund. I want to know your current portfolio. If you could just give us some details on that.
Yeah, currently I am holding technology-related sector only. After that, I will be majorly focused on auto sector also.
So are you already have you invested already in IT schemes?
Yeah, in ICC Technology Fund and Tata Digital India Fund. After that, ICICI Nifty IT Index.
Why so much of IT? And again, you've asked for a recommendation. I mean, any specific reason for that?
Yeah, because IT sector is now it's deep in the sense. That's why I will put a lot of money in that sector.
And do you also have a portfolio that's separately investing into stocks, and that too IT stocks?
Yeah, in stock, I am invested moreover Tata Groups.
Okay, which I'm sure you must be invested into TCS also.
Yeah.
Okay.
TPS.
Okay, so you have tech schemes, and you said you have auto schemes also. You've taken auto funds also.
Yeah.
So apart from that, nothing else in your portfolio? Like you don't have like a core basic portfolio?
After that, I invested in a commodity index also. Tata Steel, Hindalco. That scheme also I am invested.
You are a very high risk investor, aren't you?
Yeah, because then only we get high returns at all. That's why.
Yeah, but then tell me one thing. Do you follow markets, and do you understand? I'm sure you do, don't you?
Yeah, day-to-day basis, I will understand the market, and I also watching the buy now, sell now, so in ET mode.
Okay.
Day-to-day.
Have you got this portfolio consulted with a professional financial planner? Have you done that?
No, sorry. I will invest in my own knowledge only.
Okay. Do you understand over diversification or the concept of over diversification?
actually over diversification is actually it's affected our returns. That's why I don't diversify a lot in mutual fund.
Okay.
In stock market, I will diversification. In bank stocks only I buy. After that, IT Wipro. That
Got it.
in share market I will diversify.
Since how long are you invested in these schemes? Since how long?
2 years back.
2 years back. And you already have 3 IT oriented funds and you want one more.
Yeah, in one more.
All right. So I don't guarantee you if Amol is going to recommend you a one more scheme, but then what I guarantee you is he's going to definitely look up into your portfolio and maybe ask you to make a few changes. Amol, now over to you. I think the case is front of you now completely.
Right. So, Kavita, thanks for bringing out so many details. Uday could join us. Mr. Uday Kumar, what I heard from you initially, I thought that there is a concentration, not diversification, but a concentration in IT sector, including IT stocks. But later on, as more points came about, I heard that you also have auto sector and you also invest into banking. So let me tell you that auto, banking, IT put together form more than 55 to 60% of the index itself. So ultimately what you, and commodities also. Commodities per se is hardly a 2 to 4% component of Nifty. But having said that, what you are effectively doing is you are investing in Nifty close to 60 to 65%, two-thirds. If all of that, if you have to follow market day to day also, if you're a professional investor, then maybe you could continue with that. But as Kavita, Sumay asked you in as many words, the diversification component is essentially missing. If you are watching the market day to day, then maybe you can continue. Kavita is also right when she said that I doubt if I will recommend one more scheme to you, but I also heard that you already have ICICI approved tech fund, technology fund. That would have been my recommendation anyway. The fund has done well over a 2-year, 3-year, 5-year, 10-year period. It has consistently beaten the benchmark over longer period of time. So I would suggest any additional top-up investments that you want to do, you could go with the same fund. As such, it is a concentrated portfolio that you are running. So further concentration in that existing scheme, which is specifically doing well, wouldn't harm you a lot. But my sincere recommendation would be, if you are managing on your own on a day-to-day basis, only then you can continue. But you are, if you have a job or profession or business that you are running and side by side you are doing this, I would suggest to take help of a professional. If not, on your own, you can diversify into broader segment of the market, something like a diversified multi-cap fund or a diversified flexi-cap fund.
We have Udaya Kumar on the phone as well. Udaya, any more question you want to ask Amol?
Yeah, is it a right time to buy Adani Enterprise?
I wouldn't be able to give a stock specific recommendation, but your portfolio already being so concentrated, I would not recommend adding to a stock that is particularly in the news and not for the right reasons.
So on behalf of Udaya, Amol, I would like to ask a few questions. Now, all those investors who want to maybe concentrate so much of exposure in a particular sector or maybe a particular theme, what advice do you want to give them? How can you make like a core on a basic portfolio first and then maybe go on diversifying and having a concentrated exposure to specific themes and sectors?
Right. So this is a very important question, and the answer is equally, the way I look at it, it's all of us, including our gentleman caller, all of us are not professional fund managers. If that was the case, there would not be questions coming to us, right? So so when we feel that IT sector will do well for next 18 months, or banking will do well for next 1 year, or pharma will do well for next 5 years, when we have this information or this kind of a deduction knowledge at our disposal, I'm sure professional research analysts aided those who aid fund manager, and fund managers definitely have that knowledge. So I would say that a diversified portfolio, and one of the favorite examples that I like to give is during 2020 health crisis, COVID pandemic crisis, we saw that pharma stocks probably generated the best returns in those 6, 12 to 18 months. But I request all of the listeners, viewers to go back into time and look at the returns of pharma sector from 2016 to 2020. You would see that the entire sector, all the stocks, most of the stocks were into a bear market. There were drawdowns as high as 40%. And only when the global pandemic hit, only then the bull market started. So if you have a complete sort of a conviction on a particular set of when you have a complete conviction on any theme playing out, you might still have to wait for several years. I'm not sure all of us have a 3, 4, 5 year kind of waiting horizon for our theme to play out. That's number one. Number two, core and satellite. I think you use the word core portfolio. Our typical suggestion is 80% of the core portfolio. If I had to give it, if I had to make a recommendation for a moderate risk investor with a long-term investment horizon, a moderate to aggressive investor, I would say that out of 80%, about 50 to 55%, 50 to 60% in exposure can go into equities, diversified equities, as I mentioned, multi-cap or flexi-cap schemes, about 20-25% into debt, and remaining 15 to 20% can go into precious metals, that is most typically gold, and another 5 to 10% exposure can go to thematic or international concepts. That's how I would design a model portfolio for moderate to aggressive kind of an investor. One last quick point here, Uday Kumar mentioned initially that only when we take risk, we get higher returns. So typically we all know that risk and return go hand in hand.
Right.
But here I want to make a humble submission that they are not directly proportional.
Totally.
More the risk that you take, it does not mean you'll get more returns.
Which is why it's important for an investor to know what kind of investment instrument they are investing and what's their risk appetite as well. Thank you so much, Amol, for being on the show and helping our viewers with that. And on that note, I'm going to slip into a short break.
वाह